everybody. Welcome back to the Command Your Brand Show. I'm your host, Alex Latronico, brand ambassador of Command Your Brand. We help CEOs and founders to get their messages out on top-rated podcasts. So go ahead and grab our new book, rated the number one PR book on Amazon at bestpodcastbook.com. And a reminder before we get into today's conversation to comment on, like this video, and smash the subscribe button if you want to command your brand through the power of podcasting. And with us today, we have Jake Claver. He is the CEO and principal of Digital Ascension Group and founder of Digital Wealth Partners, a digital asset-focused RIA, and leader of Syndicately, an SPV platform for sophisticated investors. A recognized expert in blockchain and Web3 adoption, he advises family offices and high net worth clients through a multifamily office model that integrates planning, governance, and next-generation investment strategies. Jake is a frequent industry speaker, has been featured in Bloomberg and MarketWatch, and is the co-author of the best-selling book, Wealth in Numbers. His focus is helping investors build durable, multi-generational wealth in the digital economy. So I'd like to present to you guys today, Jake. Hey. How's everything going?
Bless, brother. Thank you for having me.
Of course. Thank you very much for coming. I'm excited for today's conversation.
Yeah, it was a great intro. I'm very flattered. Appreciate it.
Good, as you should be.
Right there.
Well, I mean, you've definitely built up a very interesting platform here. I find very fascinating. And it got me going back into thinking my own, how should I say, I guess, ignorance in regards to the crypto. Because it's such a fascinating community. There's so much to know about. And I feel that because there's such a plethora of data, it's really hard to, I guess, kind of dip your toes in if you feel like you've missed out on a boom. It's like where to start with all of these thousands coins coming up all the time.
Yeah, it's overwhelming. You know, when I first got in, I watched a couple videos and I was like, okay, this seems way too complicated. And I didn't know if I was going to do it or not. And I was like, you know what? Like, there's an opportunity here. I'm smart. I can figure it out. Right. So I did a lot of research and then jump in. You're still going to make a bunch of mistakes if you're doing it by yourself and you don't have the right advice on things. But that's normal, right? Anything you get into, you're going to have to learn. And sometimes it's a school of hard knocks that gets you to the point where you're trying to go. But yeah, we help people in that aspect. And we built out, like you mentioned, a full end-to-end private client service for those that are high net worth individuals or family offices, or even those that have just a significant allocation to digital assets for themselves, whatever that might be. We have a lot of education that we put out in addition to all the products and services that you mentioned as well.
Nice. That's very impressive. And obviously you managed to find the right information out there because, I mean, you built the fastest growing multifamily office in less than 2 years. So I guess, how did that rapid growth teach about scaling wealth management?
So nobody else has ever really kind of blitz scaled an RIA. There's a lot of compliance and red tape. And the unique value proposition that we bring to market, we operate in a blue ocean. There's really nobody else that provides financial advisory or these private client services to those in digital assets. And the industry has been really opaque on that because of the regulation. There hasn't really been a regulated way for most people to participate. And so most people have just stayed away from it. If you go talk to your traditional financial advisor, they're going to tell you, sell that crypto, bring it over here so I can help you manage it in the products and solutions that we have. I have no way to even advise you or view it or put it into the reporting. And that's the fun part of what we do is we're either doing everything at a basic level that's already been built in TradFi, and we're having to cobble that together and orchestrate these things for digital assets, or we're building financial products that are on the bleeding edge of anything that's ever been created. There's really nothing in the middle that we do day to day. And it's been a wild journey. To your point, the fastest growing RIA before us was about 600 million in 3 years. We went 0 to $1 billion in 1 year in 2025. But again, it's a product and solution that people wanted in the market. Most people that buy digital assets, they buy it on an exchange and they hold it there, which is kind of sketchy because there's no recourse. If they go bankrupt or take your stuff, they're gone. You don't have insurance on it. They don't have the financial licensing to be able to operate in a lot of jurisdictions. And the industry is maturing. There's a lot more of that that's happened here in the recent past. People have figured out, okay, probably need to be a bank, or I need to be a broker dealer, or I need to get these licenses to be able to transact and continue to grow my business. but it's still kind of the Wild West in that area. And if you're not holding it on an exchange, you've sent it to your cold wallet where you've taken radical responsibility. You have to maintain the keys. You have to understand how to, recreate the wallet if something happens. God forbid something happens to you and your spouse has no idea about it and it's in your will and it passes to them and they have no way to access it to pay the taxes on it. There's just a lot of situations that are not that great in crypto because there really isn't a formalized version of it until what we've put together. We effectively create a Schwab account for your crypto, right? So you go buy it on an exchange or you can buy it with us and we hold it in institutional custody there at Anchorage. They're an OCC federally chartered bank and they have the highest grade security really in the world, in my opinion, for any institution. There's a reason that BlackRock moved all of their collateral or the crypto that they hold to back their ETFs over to Anchorage because it's the most secure custodian here in the US and globally. And so, we basically democratize access to that for the average person that has a significant allocation. You're able to hold it at the same place that BlackRock does and, have all the additional benefits that provides.
Interesting. I mean, it's very fascinating. And, whenever I talk a look into the, with the generational wealth and building up these things, I feel like there's a lot of focus and emphasis on really building up your wealth for that generational access. And I know you've mentioned and talked about this before, but how is it that I guess you're able to really help with the crypto space and bring that and actually turn that into a generational vehicle?
For sure. I mean, any asset can be passed on to the next gen, but like I just mentioned, if they can't get access to it and nobody knows where it is, that's not really continuity. You're not able to pass that on effectively, right? So we deal with all the taxes, we deal with all the estate planning, structuring stuff the right way to be able to mitigate risk from creditors, and then also have continuity across generations. And you're able to add your spouse to the account, just like you would at Schwab or Fidelity, any of those. You're able to have beneficiaries on the account. We can work with the trust if you have it in irrevocable trust. We can add your distribution trustee on there, and it's a multi-sig wallet where multiple people have to sign off in order for assets to move. There's just all these this nuance that comes along with the estate planning and passing from this gen to next gen that is very difficult and cumbersome if you don't have an institutional custodian or a partner like us to be able to help facilitate that.
Okay. Yeah, no, that makes sense. And I guess, you've obviously worked with multiple investors day in and day out. And so I guess what would be the biggest mistake that you tend to see investors making when structuring their digital assets?
They keep it in their personal name. So, and that doesn't sound like a mistake, right? You're like, well, I want my name on the account. I want full control of things. You just don't get any credit or protection. So God forbid you rear end somebody or even your kid rear end somebody and you get sued and the damages are above and beyond the insurance. They're going to be able to they'll come after you personally, especially if they've figured out that you have some money, right? People file lawsuits for any reason these days. And so, we work with people to structure their assets in a holding company that we file in Wyoming. You get really strong creditor protection in Wyoming. There's charging order protection there, just like you would get in Nevada. You get, anonymity because it's attorney-client privilege. And on the public documents, your name's not mentioned, your address isn't mentioned. It's very difficult for anybody looking at that at the surface level to tie it back to you. And then, we tend to pair that with a living trust. Most people should have a living trust. You don't think about probate until you've dealt with a loved one that's passed away and you had to go through it. And you're like, oh my gosh, this is horrible. We got to register everything with the state and I got to go talk to this judge and there's going to be arbitration. And, when money shows up and even if it's stated a certain way in the will, you have executors that, take over things or people that are unhappy with what they got. And then you end up in a lawsuit. It tears families apart. And so, you want to make sure that that's structured the right way and you're being proactive rather than your kids having to be reactive on the other side of a tragedy that they didn't expect.
Okay, that makes sense. And now there's one thing that you've caught my interest on a lot is that you were mentioning the next economic shock, and you're saying that that economic shock won't be inflation but deflation. How would that be the case? Can you explain that to me a little bit more? Because I guess I don't really understand how that plays out.
Right. So we haven't really ever experienced a significant deflationary event in our lifetimes. We've just been used to prices rising, right? Like everybody's like, it costs a little bit more, And now it's at the point where it costs so much that you can't, some stuff becomes unattainable or unaffordable on your regular salary. And the average
Right.
person's having to pick up multiple jobs or side hustles or something else to be able to just make ends meet. Well, if you knew that was coming, you would front run that with a large amount of M2 money supply increase. If you knew the deflationary collapse was coming, the prices were going to come way, way down. And the reason that that's going to happen is from technological advancement. So you've got AI converging with humanoid robots. You've got blockchain infrastructure, distributed database, and accounting. You've got 3D printing. You've got all of these progressive technologies that are converging at one time. And if you think about it, in the late 1800s, there was actually a deflationary event in the U.S. where your money was worth more than it was the previous year. Like, imagine prices going down. That's a weird paradigm to live in. I think we're about to come into that again here. And if you think about it, it makes sense. So if you were able to implement all of these technologies for production, right, and you remove, I don't want to say, remove jobs and people, but let's say you remove jobs and people, and the cost of production comes way down. Well, the cost of the end consumer could also come way down, even though they're making higher margins at a corporate level. And I think we're going to move into a renaissance period here, which is going to be really unique. So, a lot of people are against UBI. Elon's talking about UHI, or universal high income for people. In the Middle East, they actually pay people a stipend that are citizens there because the country sells so much oil that they can actually pay their citizens. And I think that we'll move to something similar globally as we move away from this per capita model, or people having to be the ones that produce value, and you create these systems and solutions with AI agents and humanoid robots that replace that labor. You're going to have significant cost reductions and a higher level of productivity. You're going to have more product on the market for the same amount of demand from people, and therefore prices would come down if you don't understand supply and demand dynamics. So all of that coming together at one point, I think we're on the precipice of a significant deflationary event, and the pressure that people are feeling with the higher prices is actually going to get a lot better in the near term, I think.
Oh, good. That would definitely be good to see. Because the only thing I think I've ever witnessed with prices going down is probably the price of gas.
Yeah,
I don't think I've ever really experienced it before.
Yeah, it's so that's a commodity, right? And then based on how it's almost a direct correlation for how much is on the market versus the demand, right? And demand is still slowly rising, right? You've got more energy costs and other things coming online. There's always a higher demand for energy, and so there can be a higher output for oil. But if there's a surplus, like we had in 2020, you had negative oil, and you couldn't give it away. Because of the demand for it, right? But and that's kind of what they try to walk is like how much is on the market versus the demand, and we need to keep it at a stable price where everybody over here that's producing it still makes enough money to continue to operate, but the consumer isn't so underwater that they can't even purchase it or move around and stimulate the economy. Because if you're not traveling, if you're not able to power your home, a lot of what we've built really just kind of goes to the wayside. So it's a good example that you brought forth there.
Perfect. And then I guess what good question I'd have is how would investing in crypto or having a partnership with cryptocurrency help with this economic shock that we see coming up?
So people are aware of the debt crisis that we're in, right? Like it's not good. We $38 trillion in debt in the U.S., which is more than 130% GDP. I think it's even greater than that now. When you get over that threshold, it becomes detrimental. Like you can't even service the debt with the GDP that we're producing on an annual basis. So we need to restructure the debt. And that's where crypto comes in, moving things on chain. You end up with a positive flywheel. So you can imagine like what the wealthy do. And again, most people probably don't even realize this. Elon, it might be worth hundreds of billions of dollars. He doesn't have hundreds of billions of dollars in the bank. Okay. Like his companies are worth that, and they produce cash flow, and they're generating all this value, but they have to put that money back in. Right. So on paper, he's worth a lot of money because his companies and his interest in those companies are worth a lot of money. He may have $1 million in his bank account, a couple $1 million in his bank account. Right. So it's not liquid. Most people don't realize that. What was the question again? I'm sure you can chop this out.
Yeah, no, I was just wondering how how I guess utilizing crypto
Oh,
can help with the upcoming a new economic shock.
yeah. So you have all this value that's locked up, right? So he's got the money in his companies. He borrowed that money to be able to
Mm-hmm.
buy Twitter, $40 billion. He borrowed against his SpaceX shares to buy Twitter and make that acquisition. The financial system will be able to do the same thing with crypto. So if you have an appreciating asset that you're able to draw down debt against, the unique thing about crypto is the more value that moves on chain, the more transactions that are moving across these networks, the higher the value of the token. So if you
Mm-hmm.
understand that, it's a positive feedback loop. So you could borrow against that, buy assets, move them on chain. Because there's transactions and money moving in the market, the value of the token continues to go up. And so what you borrowed against, now you have additional equity. A lot of people understand this, like taking a HELOC out on your house. You bought your
Mm-hmm.
house for $300,000 over the past 5 years. Now it's worth $1 million. You could refinance it and pull another $700,000 out, right? Even though you've been making
Mm-hmm.
payments on a $300,000 note. Same thing will work for the economy. So they're going to be able to restructure the debt by moving everything from where it is now, moving it on chain, and having an asset that appreciates as all of that happens to be able to balance things out with between the credits and the debits or the assets and liabilities on the balance sheet.
Okay. I mean, that definitely makes sense. It's very, very interesting. And I could see why crypto getting as much attention that it's been getting lately. Because again, it's very funny to me when my first exposure to crypto was probably in 2008 or 2009. I don't remember it. I was still in high school at the time, and I had a buddy of mine tell me, "Hey, there's this thing called Bitcoin. You should buy some." And it made no sense to me. And unfortunately, I didn't go out and buy some Bitcoin at the time. It was like right at its inception point. I think I would have been having a very different lifestyle if I listened to my friend at that point. But seeing how all these things go and how it can really interact and impact the marketplace, it seems very fascinating to me because when I think of the concept of the dollar and the currency that we use it, every day that dollar gets weaker and weaker and weaker. But it looks like with these stable coins, because of its appreciative value, it gets stronger and stronger. So it's just a
Well,
very interesting way to look at these things.
yeah, so stable coins are backed by treasuries, right, in a one-to-one.
Mm-hmm.
So if you trust that country that they're not going to default on their debt, then they're fine, right? But you do have tokenized gold. Paxos has a stable coin that is reflective of a gold's value. The unique value proposition of some of these networks is going to be they're going to be backed by the global economy effectively.
Mm.
So as assets move on chain and there's transactions happening in there, these markets already exist today. You've got the stock market, you've got the FX market, you've got commodities, you have Swift as an example. It's $5 trillion a day traded across the global infrastructure for Swift.
Mm-hmm.
Imagine using that as the backing or representation of value for something, right? That's hard to conceptualize. Another way that I could put it would be like, you and I are younger, but before the internet, how much mail do you think people sent? Like letters to communicate with each other?
I'd imagine quite a bit.
Yeah, I mean, if you were really getting it, we're going to say like 15, 20 letters a week, right?
Mm-hmm.
Like that's a lot of letters if you're sending that much. How many
Right.
emails do you get a day?
Which email account?
Right. That's what I'm saying, right? So the volume of payments, once this is tokenized and the frictions are removed, cost and latency become zero, it's going to have an exponential growth to the upside and how much more volume is going to happen across these marketplaces and these networks for settlement. And if you were able to use that as the backing for some of these digital assets, depending on which lanes they're operating in or which protocol makes the most sense in one of those applications, that's kind of the value proposition for these tokens is commerce and trade, and the exchange of value between other people ends up backing this protocol and the token by proxy.
Interesting. Well, that definitely makes a lot of sense. And it's very fascinating to see these things because, me coming in kind of baby understanding of crypto, it's a very fascinating sphere. And I feel like, okay, I definitely need to get back on board of really learning more and more about crypto.
Well, you check out our YouTube channel. I've got hours and hours of content over there.
Perfect. It would be nice to make sure I can get some information that's not, lost in a sea of information. And obviously, seeing your success with it, I feel like, okay, that's probably a good starting point to get access to this information.
Well, I try to make it simple for people. The other analogy aside from email that I use is, do you use a payment app?
Yes.
PayPal, Venmo, Cash App, one of those. If you're international, maybe Wise.
Or Pix.
There you go. So I want to send you money from Cash App. Can I do that?
Technically, yeah.
Well, how?
You just send it over. Well, from what I understanding is, you pull up my username, you send over the money, and then I can accept it. But it usually takes, depending if you want to pay a fee or not, it'll take a couple of days before it goes through.
But I have to have the same application that you're using, right? If I have Venmo and you have Cash App, I can't send you money, right? So early on in email, you had to have an AOL email, and I had to have an AOL email for us to even be able to send emails to one another before the email protocol existed, right? And then you could send Hotmail, Gmail, all of the other ones, right? That's also what this technology does. Is it allows for interoperability between all these payment applications. And you just said it takes a couple days, right? Well, imagine you could get it for free instantly. That
would be nice.
What this does, right? So that's the killer application for crypto and this technology. And most people, it's this kind of ethereal, speculative, I don't know which meme coin to pick type thing, but there are real world applications that this solves for frictions in everyday life. And it will do that, and you won't even know that you're using it. You'll just send your dollars, the other person gets it. Just like you send your email and the other person gets it. You don't even think about it.
And it even sounds like similar to like even like stock options. So you're paying money to these corporations, and they're obviously doing something with this money that's generating that income, which is why your portfolios go up or down. So it seems like a very similar concept in that regard.
For sure.
And I know that obviously you talked a lot about teaching and having these YouTube videos out there, and I know we have a little bit of a little special thing that we're going to get into in a bit in this episode. But I was wondering, how is it, or like, aside from like the YouTube video, are there any other options, or I guess different ways that I can learn more from you in terms of like, how do I get into crypto? What really is the difference between finding that right meme coin? Like if you got into Doge right before it was, when it was a fraction of a penny before it split up to, 76 cents? How do I go about learning some things like this?
Well, the asset class itself is going to move from a speculative environment. We're under $3 trillion in total market cap today, which is 1/10 of gold. Stock markets globally are worth about $600 trillion. So the asset class is super nascent still, and that's why you get the volatility in those large moves like that. Is when you do see significant inflows, $1 billion moves into a token, you see some like crazy upside on this stuff. But it also means that people can manipulate it and rug you. So you'll have, a bunch of people that, come together that push the value of a token up. There's FOMO, people follow in, and then they pull their money out, and everybody's kind of left with nothing. You don't want that. You want stable markets. We tend to invest in things and advise our clients over there, digital wealth partners, to look at more utility driven, like real world application digital assets versus picking the next meme coin. We know people that do that, but that's not really our game. We're on other platforms. So we're on Facebook, we're on Twitter. Twitter is probably the best platform for crypto information and really like real time news. Since Elon bought that, I think he's done a good job. He's rebranded it as X.com, and we're going to change it to the Everything app. We'll see how that works out. But there's crypto Twitter, like that's a thing. And so if you're following the right people and you kind of get into this niche, your whole feed can just be crypto stuff. And there's even sects within crypto, right? Like I'm more on the XRP side of things. There's other people that are on Bitcoin. There's other people that champion ETH or Solana. I mean, any of the top 10 cryptos have some type of community behind them, and everybody champions what they're invested in on there, right? So it's difficult to discern, where the best opportunities are in the market. And that is, again, why you'd want to work with a financial advisor to make those decisions.
Interesting. And it definitely makes sense because it's always hard. Whenever I do finally start going back into it, it's okay. Am I actually getting real data, or is this person just trying to boost their own portfolio? Right. It's always like a thought that crosses my mind, and then it makes it so I really want to learn this, but it's so hard for me to actually find trust in the information. So it's just a very easy way to give up. But it definitely sounds like it's not a thing that we want to ignore or give up on or even miss this opportunity, especially with the amount of growth that's still available.
Oh yeah, I think so. We talked about some of the market caps of those other markets globally, and I told you those are going to move on chain. Everything will be tokenized. Like any form of value over the next decade will end up on chain. So debt, real estate, raw minerals in the ground, things that are unmined, illiquid assets that people can't really get much value from today, IP, artwork, you name it, will end up on the blockchain. And again, you're not even going to realize it. You're just going to log into your Google wallet and see all of your assets right there, and you'll be able to trade them real time with somebody else. You're not going to worry about how it works. You're just going to be like, cool. But if you could invest in that technology before we got mass adoption on it, that we're right now in the market. I would correlate this to like 2001 for the internet. We've had a meteoric rise, a big fall, and the fundamentals right now for crypto are exceptionally high in comparison to any time that they've been in the past, and sentiment is at all-time low. So it's like buying Amazon at $6.
Okay.
Deal.
Yeah, I mean, it's definitely, that paints the perfect picture. I can fully understand that. I remember that .com bubble. That was a very interesting time.
Yes. Yeah. A lot of people lost a lot of money, and a lot of people that invested at the bottom there have had prolific gains over the past couple decades.
Oh, yeah. Oh, yeah. And, I was curious. So obviously, whenever we think of crypto, or when I say we, I'd say it probably the more ignorant side of people looking into crypto. I very much look at it. It's like, oh, there's this potential to really get rich and like break through the day-to-day grind that we've been living in, right? Really break through all of these fun, uncomfortable financial circumstances. And so I guess, is this something that I guess you touch upon how to use that effectively? Not necessarily gambling on like the meme coins and things like that, but like if somebody's like brand new, or maybe they're not like a high net worth individual that can really jump in and take full advantage of your services, is there something that they can access with you or like help get a footing into this, or feel like they're moving in the right direction and they can really see a way out for all of these troubles that they're in?
Money solves money problems. It doesn't, like, once you get the money, there's other problems that you don't realize you need to solve. But if you're living paycheck to paycheck and hand to mouth, it's difficult to think about any of that other stuff, right? So those are problems that are right in front of you. And this is an opportunity for people, very similar to the .com boom, very similar to AI and some of the other things. Like I mentioned, all those other progressive technologies, they're going to boom over the next 10 years also. If you're taking advantage of that and you're positioning yourself well and you can pick the winners, it's very passive, right? If all allocation is an asymmetric bet, and it can make a big difference in your portfolio. Most of the family offices and high net worth individuals that we talk with are looking at this asset class for just dipping their toe or getting some exposure. They're looking at 1% to 5%, right? So if it goes to zero or they misstep, it doesn't break the bank. It doesn't cause them strife, or they're not losing sleep over it. But if it goes 100x, it literally doubles their net worth.
Right.
So like that's the way that I think about this asset class. Is it's an asymmetric bet, and you probably shouldn't roll the farm on it unless you really know what you're doing. And you should probably just have some diversified exposure through either an ETF or you bought 5 to 10 cryptos and they're in the top 100 cryptos or something that you think are going to do well. One of them's likely to do decent, right, over the next couple decades. And all boats rise with a rising tide. As there's more liquidity that moves into this asset class, and those networks get used, you're going to see price appreciation on those, and it's going to become premium collateral that you'll be able to borrow against and earn yield off of. And we're building out all those products today. So, I think there's a huge opportunity for people that are W-2, working class 9 to 5 people that are in a situation where they don't have much. I'll give you an example. So my barber, okay, great guy, love him, does a fantastic job, as you can see. He about 2 years ago, I've been in this for a while, and we got to talking about things, and he was like, look, I got like $500 in my savings account that's like for if I blow a tire or something, that my wife is going to kill me if I put it in crypto, but I really want to do this. And I was like, look, I'm not trying to get you to fight with your wife or cause problems in your marriage, any of that, man. But put $500 in today. He's 40. And I'm like, just don't touch it till you're 60 years old. You're going to be able to retire type thing, right? In my opinion, if it's placed correctly. And so that's the opportunity at hand. It's not a get rich quick overnight success. Some of it will be, and we've seen that in crypto, but we've also seen those people lose their money very quickly, continue to take risk in the space. You should only have to get rich once. Okay.
Right.
So if you make 10, 20, $30 million and you're a good steward of that, and that's really the mindset shift that I think people are going to have to make as they come into money is, today it's your money, right? Tomorrow, when it's more money, it becomes your family's money, and you are stewarding this for the next generation. And how to protect that and preserve it and make sure that it's working for you and the family and that they're going to be able to benefit from it. Wise men plant seeds today that their grandchildren will sit under, right? That's a good proverb that I like to live by. So anyway, all that being said, I think there is an absolute, probably the once in a lifetime or multiple lifetime opportunity right now in crypto for people that have figured it out and positioned themselves well.
Excellent. Yeah, I really like it. And you've definitely got my interest very sharply back in onto the crypto market. I'm definitely going to be doing a lot of research, and I know I'll be going onto your YouTube very shortly.
Very good. Well, let me know what you think.
Will do. And one thing I had a quick question on before we wrap up. I saw that we have this Beyond Broke Mastermind. Could you explain a little bit more to me what that is, and I guess what would be the benefits of joining this mastermind?
Yeah, for sure. So this was originally my consulting company. I was working with companies to help scale and exit in M&A, just blue collar people that wanted to sell their business to a venture capital fund or private equity firm. And I started, I mentioned as a previous podcast, but I started a little Facebook group back in 2020, very early on with all this. We had like 5 or 10 people. And over the past 6 years, it's grown to 18,000 people in this mastermind. We run a full Discord community. We have a full website with a bunch of resources and financial education. We have multiple calls a week in there. I've been a part of a lot of other masterminds. It was not cheap to participate in, $3,000, $5,000, $10,000, $35,000 a year. To be able to get access to other people that have the information and be around high net worth individuals and learn from them. That's the whole point of a mastermind is you're able to glean nuggets of knowledge from people that have been there, done that, come before you, and then they're able to pass that on. And then obviously you provide your value and expertise in whatever domain you're proficient with. Right. But, we have this community now, which is really kind of centric around people that have a significant amount of crypto in their portfolio that want to come together and do cool stuff and also help each other as they diversify after price appreciation for things and run private deals. We do more in real life events than any other crypto community. There's a lot of online stuff that people do nowadays. We have another event in Nashville that has about 700 people coming on St. Patty's Day here next month in March. And then we'll continue to do those across the year. We have one almost every other month. And then we have local meetups that other people in the community put on. So if you are into crypto and you want to meet other cool people that have aligned interest and don't look at you like you have a third eye when you start talking about it, it's a really good place for that.
Excellent. And now you were mentioning with some other masterminds that could be pretty pricey, like $35,000 a year. What would I be looking at to get into the Beyond Broke Mastermind?
So we have a social membership that's just $25 a month. Okay. The next level up is Carbon 1, where you can participate in some of the private deals that we offer in the community and get access to some additional resources on the website, which is $100 a month. Carbon 2, which is the third level up, is $250 a month, but that's more for business owners or people that are a little bit further along in their estate planning, a bit more sophisticated conversation. And then we have a top tier, which is Carbon X, that's an invite-only deal.
Interesting. Well, good. I like that. It really makes it a lot more accessible. I always love the idea of masterminds, but as you mentioned, some of them can just be really expensive. And I was going to say, it's not even a cup of coffee a day. I mean, nowadays with the price of coffee, it's about 1 week's worth of coffee for a month of this information.
Well, we want to make it accessible for people, right? And I try to provide more value in that community than I've ever received in any of the other masterminds that I'm in. Most of the time, the person that started the mastermind, they're hosting small little get-togethers, and it's extremely expensive to get their time, and they do coaches and other stuff. And there's nothing wrong with that model. But I think it just kind of waters it down a little bit, and people overpay for information that's not as direct or as good as it could be.
Yeah. Perfect. Okay, and then I guess just to wrap up, where could I find more information on this, or like where would I go to get to, I guess, participate in the mastermind itself?
Yes, it's beyondbroke.com. Pretty simple domain, and the whole premise there is again to go from beyond broke this way to beyond broke on the better side of broke, right?
Perfect.
Yeah, awesome. We'd love to have people there if they're interested.
Yeah, I mean, I'm definitely going to be looking into that myself. It's a very interesting thing, and I think you're right. What you've been saying, it obviously it's a little bit more of I guess, like, of an unaware, or that's not right. Like somebody who's not super familiar with it, I can see the value. I can see that this really is going to blow up because it just answers so many different things. And I think speed of everything and interconnectivity with everything is probably what we've been pushing for the last 30, 40 years on everything that we've been doing in the economy. So I think crypto really just melds everything perfectly into each other. I can't see it going any other direction.
Yeah, so, it's going to galvanize global commerce and all of these markets, and your ability to swap between any value that you have, you'll be able to exchange for some. It's the ultimate barter system with no intermediary, basically.
Perfect. How money should be.
It's right. Exactly.
Awesome. Well, I want to thank you very much for your time today. So it's a very, very fascinating. I feel so much more aware of what's going on. And for the people listening, how would they be able to find you and to learn more and connect with you?
If you want to go check out the YouTube channel, like I mentioned, it's just Jake Claver on YouTube. And then Jake Claver across most of the other platforms except Twitter, where I'm on beyond_broke is my handle over there.
Perfect. Awesome. Well, thank you so much for your time again. And as a reminder, guys, if you like today's conversation, to make sure that you hit the like button and smash the subscribe button to stay tuned for future episodes. All right. Thank you again so much. Of course. Take care.